The RBA has just put rates up again by another 0.5% for the next month. And I'm going to take you through why they would have done this and then what you are going to expect to have happen in the near future. They're obviously looking at various media releases, plus they're also obviously trying to soften the economy in pulling those commitments back as much as possible. So household spending is on the rise again in July. This is public information. It's released by the ABS, the Australian Bureau of Statistics. They release these media releases which talk about household spending rose 18% in July. One thing to consider as well, the RBA has got out of date information because it obviously takes time to collate this data. So they're making a decision over 1 month in advance or in addition to when the actual data was available. So they're always going to be a little bit behind as to exactly what's happening in present time. So household spending rose by 18% in July 2022 compared with the previous year. So you can have a look at the graph and where we're sitting. So where household spending is sitting quite high. So obviously the RBA wants to pull that back so that we're not spending as much. So we're not stimulating the economy as much as what we are and trying to bring that inflation back down to normality. So household spending is up. The business indicators, so in terms of what businesses are looking like in Australia overall, and if you have a look at the top line, company gross operating profits rose 7.6%, seasonally adjusted. So from the onset, household spending is up, businesses are making money. These are all indicators that they need to cool the economy other than our typical inflation that we all see. So there's other things that I'm sure they would be considering. So from the onset, our economy looks like it's doing really well, and it is according to these figures. Again, this is old data. It's actually in June, not even July. So this data is a couple of months old. And then the other consideration is retail trade. So you've got household spending, but obviously retail trade is up as well. So those three things are going to point in the direction that our economy is doing really well. And the main one of those is household spending is up 18% over the last year, and it's the 17th consecutive month through the year with increases in total household spending. So we're into high spending period, and it is not that old, although the data is over a month old. The data is not that old. So hopefully when August figures get released, that household spending gets pulled back a bit, which I think it will after the last couple of interest rate rises. But what's interesting then is, yes, all these things are doing really well, but what are people starting to do with their home loan commitments? So if you have a look at the home loan commitments, which was released at the start of September, and you have a look, the new home loan commitments fell 8.5% in July. So in the same period of time, people are still spending money, they're still stimulating the economy, but household commitments are falling. So that's really interesting, and one thing that I want to consider further, because the housing market is obviously cooling, and you can see that we had a massive spike. Obviously not anything that most people wouldn't know by now, but we had a massive spike. So for us to get back down to where we were before, we're going to have to come back a little bit for home loan commitments. But keep in mind as well that the housing market has increased substantially. So if you take that increase as well, we're not going to get back to where we started off previously. We'll probably come back to somewhere a little bit above that, I would think, in terms of home loan commitments. If we got to that same level, it's actually quite a bit less because of the price of property has gone up substantially. So it's expected that home loan size has increased as well, but that's not always 100% accurate. It's just a speculation and my personal experience. So that's where it's sitting, and it's of no shock that the RBA rose rates just recently, and we're probably due for another couple of smaller rate rises until the end of the year. And I don't expect that we will see further rate rises into 2023. Hopefully that the rate rises has cooled the market enough and pulled back inflation. And then once we head into 2023, we'll hopefully see some manufacturing lines start to improve. We'll see some immigration into Australia, wage growth in the construction industry, especially the construction prices start to pull back, and that should have an effect on then what people do with property and building. And we're probably going to see a flat market into 2023, if not a further declining market in areas. And then we're going to go into 2024 probably really strong, leading up to the next boom cycle, which will be a construction boom cycle.